All right, welcome back, Matt Davio. We are sitting here 125 before Apple earnings, and just wanted to give a couple thoughts to the market sitting at all-time highs as it relates to the S&P. And real quickly, the S&P is again sitting up near highs. We didn't have much movement today. We had about a 5-point movement, as you can see here on the chart. Only about 5 points wide in the S&P. Really not a lot to sink your teeth in from a trading perspective intraday. A lot of that has to do with two factors. Right now you've got the Apple earnings tomorrow, or rather 30 minutes here, coming out in 30 minutes. That's 2 p.m. on the West Coast. And then tomorrow you have the beginning of the Fed meetings, and the announcement of the rate will be Wednesday at 11 a.m. On the West Coast. So coming up in about 48 hours, you've got the next FOMC announcement, which I suspect will be no change and no nothing but a bunch of verbiage. So don't expect much there either. We've got Apple coming in 30 minutes, and I just wanted to talk a little bit about trading being a business. The month of October has been, for me, a frustrating month, which we saw in the beginning of the month take us down to kind of looking like we were going to break down, and I'm going to pull back the charts here to try to show you this. On October 9th, we were trading near the low area on these charts here of 1637, 1636, and we have rallied now about 121 points, which is pushing 8%. 8% when it comes to the S&P. The NASDAQ is up now about 9%. And folks, we've seen just a monstrous 3-week power move into this Fed meeting. After the Fed meeting tomorrow, we've got another 6 weeks until the next one, and then we're done for the year. Mid-December is the next meeting, and then we are done until late January for the Fed. So remember, Fed meetings are 8 times a year. One thing I wanted to talk about when it relates to trading as a business is not sometimes trades are not as abundant as they are others, and you have to really look at trading as an aggregate business, and trading is a business. So I want to talk about that just a little bit. Don't focus on the minutia of 1 day versus 1 week versus 1 month over the entirety of your quarter, your multiple months, and your year. You're going to go through periods where there may not be as much activity, there may not be as many trades, and you may have months where you're making more money than you are other months. Matter of fact, this month has been pretty much a scratch month for me, and it's probably been the worst month for the 2013 trading year. So take into account that the aggregate is much more important than the minutia of the day-to-day or month-to-month or week-to-week. So keep this in mind. Just wanted to shout out here before we go to the Apple earnings. Again, tomorrow, I'd really want to see how the market reacts to the S&P how the S&P reacts to the Apple earnings before I make any determination. Right now, again, we've had about an 8% rally in the S&P now in less than 3 weeks. And if you haven't been long, you've probably missed the boat, and it's probably too early to be short right now. I don't think Apple is going to tip us one way or another. The way their earnings have been reacting is very positively. Everything goes up. Amazon, Microsoft, Google have all had big upside moves. So can we have another one with Apple? I don't know. I don't have any money laid on that bet. I would say if you wanted to put something out there, you probably had to bet more to the downside. But again, that being said, that's where we are. We're waiting for the Apple news to effect how we're going to trade tomorrow's market. Wait to set your narrative based upon how the market behaves accordingly post Apple earnings. That's it. We'll see you on the other side. Have a great trading Monday. This is the